Hello, everyone. I know people are just getting in as we speak, but it's great to see everyone as the numbers are climbing up. Greg, you were saying, by the way, with the beard, the northern. So with Canada,
Yeah.
you've been up here, I'm assuming, a few times.
Well, I've never been to Canada, but I grew up in Alaska, right? It's even more north than Canada. I used to work in the Arctic Circle on oil rigs as a roughneck, so I was like 6 miles off the north coast of Alaska, as north as you could go.
See, that's the story I tell people that I did, and it has no correlation, but it sounds like I'm in the big leagues if I say I went to the oil rig. So I'll have to take that for the
I mean, it's just a scientific fact. Oil field roughnecks that turn to marketing and digital entrepreneurship are just better at it, right? It's got to be real. There's two examples.
Excellent.
Hey, guys. I see everyone's just jumping in now. Hello. What's going on? Patrick, what's going on? Nina, Lakshita's here. Amazing. Alan, Nofel. Oh, Abbas is here too. Hello. Bill, Charm, Dennis. Dennis, what's your photo of? What is that? It looks like a charger almost. Okay, cool. Kevin's here. Navesh. What's going on, guys? What's going on? Super excited to have you guys all here. Natalia's here. Shane. Ooh, right back to you.
Where the name Greg entered the chat here. That's a powerful name, Greg. I highly recommend it. It's a good name.
there can only be one Greg, so you guys will have to figure out if he's speaking, what's going to happen then.
Do a highlight
card generator.
What's that?
Very cool. I was reading Jonathan from Card Generators here. Card Generator, Dragon's Den, I think, right?
Awesome.
Shane's here.
That is a cool product.
Are you taking a look at it?
Yeah. Just clicked on the link. So there we go.
Look, getting pixeled.
We just jumped on there's a poll here too, just being like, where is everyone located? We're going to wait probably another minute or so, and then we're going to jump right into these things. Wow. Okay, we got a lot of Canadians here.
Nice. Congrats on that, John. That's awesome.
And Jeremy, where are you right now?
I'm in New York.
Okay.
So usually I'm based in Austin, Texas. It's where I live, but from Australia originally.
That's amazing. And then Greg, where are you right now, Greg?
I'm in Bangkok, Thailand. I'm normally I'm normally in Vietnam, but I can't get in. I'm actually going back on Tuesday. They're opening up the borders so I can get in. So that's why it's dark and weird lighting going on in here, because it's midnight.
Excellent.
Okay, cool. We got 11 from US, we got 28 from Canada, rest of the world we got 7.
Watching we just summarize it's up late.
Yeah. Okay, cool, guys. 100K winner on Dragon's Den. Very cool, Jonathan. Very cool. Hey, Charm. Obi's here too. Okay, cool, guys. I really appreciate your guys' time. I want to jump right into things because I want to really give everyone here some of the value of what we're going to be going into. And one of the major reasons that we wanted to host this session, and this will get recorded, so everyone watching too, you guys can always pre-watch this or post-watch it. We'll be sending out a bunch of details afterwards as well, is that we get a lot of questions about how to sell on Amazon, but then more importantly, how to sell your Amazon business. And obviously the space that we've been evolving in, you guys have been the frontiers of what's happening. So I thought naturally it only made sense to bring the experts on themselves to talk about what do we do when we're talking about selling our business? What's this whole ethos around the acquisition game across private companies, buying these companies? It's super cool. And we've seen it kind of just pop up the past 2 to 3 years. I know you guys have been in the game for quite some time. So I'm really excited for this. I'm super excited.
Awesome. Happy to be here.
Yeah, I'm excited.
So guys, what I wanted to go through, and we have an entire information bank for everyone that's watching this as well. So our team built out a whole Google document who has all the details of some of the best resources that we found from Jeremy's team at Elevate, and then also Greg with Empire. And we're going to attach that Hangout, this handout PDF. So for all the different learning documents, we'll share it over email as well after. we tried to reconcile all the goodies. So after the video, perfect, it's already there. We're fast. And that's going to be perfect for anyone who wants to get some extra access. If you guys want to connect with us on LinkedIn, all the details are there. Greg said he loves the messages too. So on LinkedIn,
just spam me.
So a bit about what we're going to be speaking about. I wanted to utilize this time for everyone here specifically to talk about the Q&As and some of the technical questions. So the next 15, 20 minutes, I want to get into some just very specific sections that I thought were most valuable when it comes to selling your business. And then afterwards, I want to jump right into Q&A. So brands, businesses, everyone that's listening to this, jot down your questions, start firing them away. Even as we're speaking, I want to keep this very informal so that we can get the most value for you guys out of it. But I want to go through some really quick speaker introductions, some of the common reasons that brands may want to sell from the gentlemen themselves, some of the channels to sell your business and the different options, how to understand the value of your business, and then open Q&A for anyone who has questions as well. So my name is Blair. I'm from AMZ Prep, everything warehousing, logistics for Amazon-based businesses. We handle a lot of that from start to finish. But most importantly, maybe Jeremy and Greg, just a quick introductions about yourself and the amazing companies you guys come from.
Sure. Jeremy, you want to go first?
Yeah, happy to. So hi, everyone. My name is Jeremy Bell, the Chief M&A Officer at Elevate Brands. So Elevate Brands, we started on Amazon in 2016 in retail arbitrage and resale. And for the last 2 years, the strategy has really been about building out a portfolio of private label brands. So our strategy is to find brands that we think we can optimize and grow and expand them onto as many different marketplaces as we can all over the world, including Amazon. And that's kind of the game that we're in. So today we've got 33 brands in the portfolio. Hundreds of million in revenue, a team of 225 people working for us, and that's us in a quick cliff notes.
It's super interesting.
I could speak highly of Elevate. They've been awesome working with them over the last couple of years. We've been working together for what, 3 years now, Jeremy?
I think we've bought a bunch of businesses through the platform on Empire Flippers, and one of them, Will's Wine. There's a really good testimonial video on our website, and that acquisition it's been fantastic. It's been one of the
awesome.
The better acquisitions that we did, and the process is just very well optimized. So yeah, we love the Empire Flipper team.
we love you guys as well. So I'm the head of marketing over at Empire Flippers. Bit different than what Jeremy does, where we don't actually buy the FBA business, right? We're more like the business broker. So we would be helping you negotiate, value your business, make sure that you get the deal you want, and likewise be helping Jeremy's team, making sure they find the opportunities they're looking for. So we help both the buyer and the seller. Our fiduciary responsibility, of course, is to the seller. And we started selling Amazon FBA businesses way back in 2016, before Amazon even knew you could. So we used to get all these like funny emails from their customer service, like, well, what are you doing? You can't sell accounts. Like, no, we're selling the business. Like, no, that's selling an account. Like, no, it's selling the business. So it was this really funny back and forth for a long time with Amazon's customer service. So they finally got like, oh, yeah, you're right. Yeah, no, you're good. Because they thought it was like a fraud thing, right? But yeah, we were, as far as I know, I'm pretty positive we were the very first broker to sell FBA businesses, and we've been doing it. I've been at EF for almost 6 years now, so I kind of got to see this whole revolution and see the aggregators come online, which has been really cool. We've been predicting someone like Elevate would start coming along in the industry since probably 2017, and a lot of people don't know this, but the first ones actually came in 2018, but they all failed for the most part, so they're not around. So Elevate's definitely figured it out better than the primordial aggregator we saw back in the day.
I think it's super interesting, especially on the Elevate side, where you guys were actually sellers beforehand. I think it's a pretty unique position, because I know a lot of them, and Greg, you've probably seen the entire life cycle of this space, where they came in without that, I think that bottom line expertise coming from the actual roots of what these core companies needed, not only to function and operate, but what it takes to kind of build that flywheel out. So it's interesting how you guys came from that background, where you actually were just a company and naturally just made sense. Well, we can build one of them. What's the natural fit to build another 26 of them, or now 100 of them, right?
Yeah, 100%. So like we like to say like we earn our Amazon black belt from 2016 to 2019. And over that journey, like we got suspended from the platform 3 times, and we always made our way back. We've been black hat attacked. Our business originally started by just reselling branded footwear and apparel on the platform, and we grew that to like a $15 million kind of revenue business, highly profitable. But we realized there wasn't a lot of like value in what we were doing, selling other people's products. So we launched a brand in 2019, and we bought our first acquisition in 2019. The brand we launched, it did $2 million of revenue in the first 3 months, and this year in its second year, it'll make $1.7 million in profit. And so what we figured was our resale Amazon skills transferred really nicely to building and operating private label brands. And the first business that we acquired, it made about $1,000 a day in revenue. Everything that went wrong could go wrong, and it made about $236 of revenue on the worst day, and like it was really grim. A month later, we had it back to flat, making $1,000 a day in revenue, and then today it's it prints anywhere from 3,500 to 4,500, and that's just on the Amazon.com platform. So yeah, just being operators and having that kind of knowledge and skill set. Amazon, can be a tough industry. So just that background we found has been really helpful.
That's so good. So I wanted to get into some of these technicals here, especially Greg, and between you two. I want you guys to kind of take the floor and juggle these, because your guys' experience here for everyone listening will be so valuable. Is that obviously the major question we're getting is, why would you actually sell your business?
Yeah.
And we made a couple comments, but you guys have a story I can imagine for each one. So I'd love to hear from you guys, and maybe Greg start off and then Jeremy jump in. Why
Sure.
would a company sell their business?
Yeah, I think this is a very extremely common question if it's your first business you've ever built, especially. When it comes to selling your business, I always tell people there's 2 main reasons, like 2 categories or genres: personal and business, right? Personal reasons might be like as simple as like, I want to retire, right? Business reasons could be like, I want to invest in real estate or go buy other businesses, right? We have a lot of people sell businesses to raise their own capital to go acquire businesses, and that's where we kind of get like the second half of our name, the flipper aspect, right? So there's a bunch of different reasons why someone would sell a business. I would, and I think Jeremy, you'd probably agree with me, I would never sell a business based on just the valuation itself. I would base it on the idea by selling it, it gets you significantly closer to either your personal or business goals, like ideally both, because you deserve it, right? You just put all this sweat equity into running this business. But those are some of the reasons why someone might sell, right? But it is a very easy question to ask ourselves, like, why? Like when they build it, they're first experiencing the success.
Yeah. Well, the first question I ask myself when I look at a deal is, why are they selling? Like, do they know more about this niche and product than we do? And are we going to catch a falling knife? So I'm naturally skeptical because it's my job, but often a lot of the reasons that we hear is, I can't, and I know this pain from when we were a much smaller business. It's like, I can't sleep at night because, I've got more money tied up in inventory in an FBA warehouse or 3PL than I do personal net wealth. And that's kind of terrifying when, you get black hat attacked or inventory restrictions get imposed. So for a lot of people, it's kind of selling their business is the most important capital transaction in their life. And it's life, for some people it can be life-changing wealth creation. And so that's the big motivator for people is, if I sell this business, I've got a capital base that I can then use to go and do other things that are, as interesting. When I first started looking at businesses on Empire Flippers, I would ask people like, what are you going to do with the capital that you're going to get from the sale? And the most common answers from people were buy property or buy a McDonald's. And literally it was buy a McDonald's. And now the answer that we get is just de-risk my personal balance sheet and go again and launch another Amazon business. Because a lot of people started their business with a credit card. So yeah, that's probably the main driver. Some sellers are like, look, like I'm really good at product development and I've got the business to a certain point. and I'm not very good at creative, I'm not very good at PPC, or I'm not very good at managing the PPC agency, and supply chain's really tough, and I suck at math. So, I want to kind of, I want to find the new owner for the business, and someone that can kind of take it to the next level. So we typically see that like sellers can grow a business to kind of, $300 to $500,000 in profit before they need to start to recruit a team. And those that want to recruit a team can kind of build it to $1 million, $2 million in profit. And then those that, want to build out an organization with kind of 30 people can grow it to kind of, 5 million or more. People, some people treat it as a lifestyle asset, lifestyle income stream. Others treat it as like, this is my life's mission. So it just depends on kind of where people fall on the spectrum.
Yeah, I think to add to what you said there, Jeremy, we had this FBA buyer a few years ago. He had a famous quote with our sales team. He's like, I love all these FBA sellers. They're young, building these great businesses, and they're all completely broke. It's like the amount of money you have to put into the hamster wheel, the inventory, the logistics, the PVC. To your point, what that seller said, like, I can't sleep at night. The amount, like, even if your business is only taking you, say, 4 hours a week, like you're one of the lifestyle entrepreneurs, which is a bunch of them, right? That doesn't mean it's taking 4 hours a week on your mind, on your mental space. You're worried about Amazon suspensions, supply chain, all this stuff. And like, I think that's one of the more demotivating things an entrepreneur can find when they become successful is like, oh, I thought I was going to be the master of my own fate, but now it turns out Bezos' algorithm is the master of my own fate. Like, this dream of entrepreneurship is a little bit different than I thought it was going to be, right? But the cool thing is when you do sell, you can like tap into that dream, like what Jeremy said, the life-changing capital. So we both at this point have seen so many stories of people just massively upgrading their life, whether starting a new business with an actual budget this time instead of a credit card, or just a plethora of other stuff when they go to exit.
Yeah,
super interesting. And did you guys notice, because obviously it sounds like the biggest one is like they're going into new ventures or they're reinvesting into new projects. It's not that they want to sell to just move to Honolulu and hang out. I'm assuming there's some of them that kind of want to pack it up.
Yeah.
But when they're investing, especially, are they usually reinvesting in building another Amazon business? And Greg, afterwards, you have an asset flywheel, which I think is really cool to talk to everyone about how you think about that. But from your guys' standpoint, are they traditionally coming in and building another Amazon business? Are they building it on a whole different strategy, or are they just replicating the process and doing it all over again?
Yeah, I think Amazon's a playbook and process and SOPs, and the people that we see who are really good at it rinse and repeat. So we've bought businesses off people who are on their 5th exit. And then as you scratch behind the surface, it's like, hang on, what else are you building? And there's like 3 or 4 brands in the background, and they're just really having a massive swing. So those there's people that launched a product in 2016 where there was a lot of white space. They had better imaging, and that's all you needed to be successful. And some of those people caught lightning in a bottle. And then there's people who are just excellent at Amazon and really, really good, and they're just scaling that. Just building buy to flip is kind of the model with those guys.
Very cool. Yeah. It's super fun because it's almost, when you go to 2016, it's like the I don't want to say the no man's land, but it was more of the wild west. And people are like, how are you building Amazon now? Because brands are starting now, and that's a whole other question about like, is it too late to start like rebuilding on Amazon? But people have to understand, like, 2014 Amazon, the landscape's a lot different. And like the way to rank, or like how little you could do to get output on Amazon, you can't even compare it from the difference of like competitiveness or the landscape. It's super interesting.
Yeah, 100%. Yeah, it's just there's just new initiatives and stuff that you need to do to kind of drive the business.
I have a friend. He just recently launched or was planning to launch a new FBA product, and he's a very successful FBA entrepreneur in his own right. And he sent me a message over Facebook. He's like, Amazon's totally destroyed my entire strategy. And I've never ran an FBA business myself personally. Obviously, I've helped sell a lot, but I'm an SEO. Like, that's my marketing background, is SEO, content marketing. And the way he said it is just like, oh, he said exactly like all my SEO friends who are like, oh, SEO is dead because the algorithm changed, right? So it's always like, yeah, SEO has been dead every year since I got into it back in 2013. Like it changes, but the opportunity I think is still there. I think Jeremy, you'd agree with me there too. Like, obviously it's gotten more crowded, but that can also be a good thing in a certain ways, because a lot of people, when something like this happens, like in the SEO example, whenever there's an algorithm update and people throw up their hands like this is over, a huge swath of them just quit, and now there's a gap of opportunity in the market because they threw in the towel, so to speak, because they didn't want to figure out how to do the next thing.
Yeah. And it's a $340 billion market that's going to double in 5 to 7 years, depending on which research report you read. So, yeah, it's a rising market. So people tend to do very well in rising markets.
So, and I'd be curious, especially when we think about, obviously there's a lot of different options, and say I am a wildly successful business. I used to have a private label company way back when selling baby caddies. It like the textbook onion ring type of style, where it's like the standard playbooks of products you don't launch on Amazon way back when. So whether it's a baby caddy business or a water bottle, I've grown the business out. We're starting to scale things up. Okay, now I want to sell. What are the options? And maybe Greg, I'll get your feedback. And then Jeremy, I'm super curious about the different options.
Yeah.
Like even when you want to sell, whether like you sell the entire business or maybe they jump on board, because I've seen that happen. I'd love to hear from you guys because there's so many options, and I think we're just scratching the surface here.
Sure. Yeah. I mean, your slide breaks them down nicely here, and I'll let Jeremy explain more the inner workings of an aggregator, which from my experience, so I've been at EF for almost 6 years, and we are kind of a hybrid. So we're both the broker and the marketplace. The marketplace, like, unless you're like a sub 100K business, is really more of an aesthetic thing that we are able to use our marketing to grow ourselves more. We're really closer to an M&A broker at this stage. Like we just sold a $24 million FBA business, for instance. So, but when it comes to like the best customers I've seen, aggregators tend to be one of the absolute best for sellers. Private buyers, they tend to be ultra high net worth individuals. And to be honest, aggregators can be private buyers too, right? So there's a little bit of that crossover that's going on there. Auction, I don't know if that's really the best bet for most FBA entrepreneurs at this point. It could be doable, and to be honest, you could do like a similar auction, a somewhat auction process with a broker, having like buyers competing and all that kind of stuff. So that's a possibility, but like going to like a peer auction kind of site, I don't know if I'd really recommend that for an FBA entrepreneur. I'll let you talk more about aggregator stuff, Jeremy.
We're going to hold off on the police for now then, from the sound.
Yeah, 100%. So I think that people fall into, and I just saw in the chat, my boy Josh Dittrich is on the line. We bought his business, Essential Values, and so he's also wrote a book about the process too, which is going to be interesting reading. So people can kind of do one or two things. If you're confident, if you've never been through a sale process before and you're not confident with how to present your business in the best light, maybe your financials aren't in the best shape possible, a broker or, in particular, a group like Empire Flippers, they will help you format your financials. They will help you introduce you to many different buyers, and they know who the credible buyers are and who the credible buyers are not. And they will help you. They're like your jungle guide through the process. They'll help you with the negotiations. They'll help you with the account transfer, which most brokers don't do, but Empire Flippers do that. It's one of the key differentiators of them. And in return for that, they'll get a fee. For other sellers, so like Josh is the example I give, he prepared a summary of the business. His financials were in really good order. He had a great accountant. And he went to everyone. So Thrasio, Elevate, the entire market he spoke to, and he ran his own sale process. But like he's a unique animal. Like he's very good at negotiations. He's very commercial, and he basically just ran the entire process himself. And he got a great outcome. He got a great outcome, and we got a great outcome as well. And I think he will look back at it, and he was confident enough that he could maximize value, and he always knew that if it didn't work out, he could appoint a broker and run the process that way as well. So we see both. The benefit of, what people kind of weigh up is like, Josh didn't have to pay a broker a commission, but on the flip side, and he did a great job he did maximize value. Like he kept playing us off against the other bidders to increase the price. If you're not as confident at that, then if you pay a broker commission, they'll do the negotiating for you. And you should, potentially end up with a better price if you're not as comfortable on driving up the asset value of your business.
Yeah, for sure. I often tell sellers this, selling your business is like a highlight event, right? It's not something you're doing all the time. Like prolific seller, maybe twice, like once every 2 years, maybe, right? Because you have to have time to build up a new business. So a lot of times the seller's at a disadvantage when they are talking to a buyer, because buyers tend to be the repeat customers. So they have skill in the game, like they have M&A experience. They understand what Jeremy is talking about, maximizing value. And a lot of sellers simply don't. They either really overvalue their business or they really undervalue. Both of them not great situations. But with what you just said that Josh did, like that's exactly right. Like that's the way you should be going about it, like getting that competitive bid. And a broker can really help you understand that kind of stuff if you're not comfortable doing it yourself, right? And it's okay if you're not. I mean, why would you be? Most entrepreneurs are very busy people. They don't learn the ins and outs of M&A every day as they're managing their campaigns and their supply chain, right?
That's gold. That's gold. No, and I think it just comes down to like what you're comfortable with, right? Like the key here is that like how do you maximize the value and also become a trusted partner? Like these sellers have built their brand for years, right? Like this is their baby at the end of it. You don't want to put this up for an auction where they just kind of are grabbing it to just kind of throw it out the window. Like you want to know them, and whether it's an acquisition firm or you go to a marketplace like EF and now you actually can get consulted for it. It's a really cool idea. There's a couple questions here as well that I wanted to kind of go through halfway through because I think it's super valuable for you guys. One of them was that I think I think both you guys have very unique answers for this, but can you explain how you can sell one brand and keep a different brand? How can you transfer the remaining brand to a new company? You need to ask that.
So Amazon will let you have two different Seller Central accounts if there's a legitimate business purpose. And if you've got one business that sells cleaning products and another business that sells baby accessories, it's okay to have two separate Amazon accounts. And then you have your brand registry connected with each. You can have sorry, I'm just laughing at the Q&A because someone asked Josh if he bought a McDonald's with the proceeds.
If not a franchise, at least a meal, I hope.
So anyway. If you set up two Seller Central accounts, then you don't have the brands commingled. And the benefit of that is if you do a listing transfer, what we found is that process has a lot of friction and it tends to hurt the performance of the brand. So we've kind of sworn that we'll never do it again because there's a full range of problems with. And what I'm basically talking about is if you've got one Seller Central account with all your brands in it, the way that you transfer it across is like you assign brand registry to Elevate. We then start sending in your inventory through our account and selling that stock. And there's just, everything from PPC through to being able to update the listings and all that kind of stuff. It takes a while to get all of that, functioning properly in the back end. So my advice to every entrepreneur is if you're going to set up other brands or other businesses that you want to sell eventually, put them into two separate Seller Central accounts and just start building up that history.
Yeah, I 100% agree with Jeremy. So Jeremy and we have a common experience that the other brokers don't have because most of them don't do migrations, but that is the tediousness of doing a listing transfer. It takes a long time. Just from a logistics standpoint of like selling your business, you're much better off doing what Jeremy just said than doing a product listing takeover or listing page takeover. But that's like if you are already set up that way, like it's not doom and gloom. You could definitely do it. It's just a longer process.
The other one that I think between Daniel's and between Daniel and Megan's, they're pretty similar. And I know specifically with Empire you guys do, but with Jeremy, I'd love to hear if Elevate is with Shopify. Like when they're buying a brand, actually Daniel asked us specifically, are you guys buying all the assets? Are you guys just buying the Amazon part of the company? And I guess the second part of that is, do you guys even look at the Shopify companies? Greg and Jeremy, you guys can, I'm super curious.
Jeremy, you want to?
Yeah, 100%. We look at everything. So when we buy we don't just buy access to the Seller Central store. We buy the IP, the Facebook groups, the email, the patents, the Shopify, Walmart, eBay channels, whatever else it is that you have. Like all of that is kind of wrapped up in a bow as part of the acquisition. I think there was another question of, do you just buy Shopify stores? So there are groups out there that do buy just Shopify stores. They're not as well known as aggregators. And so what we've seen people do in the past, and I think Josh actually did this when he sold us his business. He was also selling a Shopify business. He used a broker because he wasn't confident he'd be able to find the buyer. And I think that is you just need to Google Amazon FBA aggregator and there's a list of like 60. So that's pretty easy. But like Shopify, e-commerce, D2C acquirers, they're not as well known. And the Empire Flipper guys don't know a ton of them.
Yeah. So just echoing what Jeremy said there, usually when you sell a business, I mean, there are caveats that could happen, but for the most part, like close to 100% is going to be an APA, asset purchase agreement. So your entire brand is going with it, not just like your Amazon listing. So if you have like 20% revenue coming from a Shopify store, that's included almost always with the sale. There has been one case in 6 years where that wasn't the case, but it was because the person had a brick and mortar aspect of their e-commerce store that they were selling. And I think this wasn't even on Amazon that we sold. I think it was a Shopify store, but they had like a beauty salon in their town that they were also selling the products. So that part was divorced because they didn't want to sell the brick and mortar part of it. But usually the entire brand will go with it. As far as the second part of the question with Shopify store, what do aggregators buy that? There are aggregators who do buy them, but like what Jeremy said, they're lesser known. We are seeing an interesting trend, and maybe you can speak on this too, Jeremy, of some aggregators now diversifying a little bit of their portfolio of buying out DTC commerce stores. And I have a working theory that one of the reasons why they're doing that is because, in my view, at least from a marketer's perspective, is it's a lot easier to go from, say, a successful Shopify store and port that over to Amazon than the other way around. Because I think there's more like moving pieces with Shopify when you first begin. But if you already have like the whole infrastructure like an aggregator has with Amazon, and then you buy a successful DTC Shopify store, you can often port that over to Amazon a little bit easier, a little bit less friction than the other way, in my view. I've had a few FBA friends who've tried to go the other way, and my Shopify friends, they seem to always have a lot more success. So that's what my empirical evidence is based on.
Yeah, it makes a ton of sense. I think like why aggregators are thinking about it is leveraging that audience to drive conversion on Amazon is key if you've got a D2C store. And we've seen, a few of the brands that we own where like a meaningful portion of the business is now Shopify. The biggest asset we have is like an active email list of 175,000 people. So we can launch any product and it'll sell out, within 90 days on Amazon. And that's ranking gold. Yeah.
The fact that you can do that with I think that's another reason why Shopify succeeds so much, and because like let's say you had a Shopify product listing page and you're driving traffic to it and it's converting well, Amazon's page will often convert even better because Amazon's obsessed with that. So like you can just switch out the campaigns and start gaining that external traffic as well. So there's a lot of benefits with the Shopify stores, but obviously a lot less buyers, or less known buyers, I should say. We sell them all the time as well.
Yeah. I think there was a question there about wholesale and retail arbitrage. So again, there are groups out there that focus on buying those types of brands or businesses. I think the key is just, if there's something in the supply chain that means that you've got a good supply of the inventory, you're more likely to get a sale done there. Whereas if you're using grey market inventory, or basically what our business model was at the start, it's tough because, your supply chain's everything.
Yeah. From our perspective on wholesale, we almost never will list them just because there's just so few buyers for it. Private label, real brands that you own, the brand registry, all that kind of stuff is what most buyers are seeking.
I think it's super interesting hearing both sides of it, because for context, like when it comes to the aggregators, we do fulfillment for a lot of them here. So we see the backside of it. So we don't get to hear kind of what they're thinking, but we are seeing a really strong trend towards, we see a new company come into our warehouse that they just purchased out. Usually their fulfillment is a bit everywhere, so it has to get reconciled. But now they're enabling Shopify, they're looking at Walmart, they're enabling even like eBay and these other marketplaces. So it's interesting where I think a part of the flywheel, it naturally just makes sense, is that you bought this successful business, right? And whether they do it before or it's after Elevate or someone on EF actually purchases it, they're expanding almost immediately. So they're enabling all the marketplaces, Canada, US, even going to the UK. Like that portfolio diversity, I think, is so valuable. And obviously Shopify is the leading horse for that too. So it's interesting to hear. Awesome. I'm going to jump into a couple more questions. Let me get through. I got 2 more slides here, and then we got some really good questions here. And I have a couple prepared as well. How do you understand how much you can sell your business for? This is probably, and I know everyone in here has got a few emails from us over the past few days trying to get understanding about feedback and the questions, and understanding how to sell your business was one thing, but understanding how much value it actually brings. I think it's a gray area, because I think different companies do it in different ways, whether it's like on a profit, whether it's on a revenue. I know there's external factors that go into it. Maybe Greg, because you have to consult on it first, how do you guys look at it from the marketplace perspective? And then Jeremy, you guys are actually the ones actually buying this, so there's a lot of risk there. How are you guys two looking at it?
Yeah. So from a valuation standpoint, one thing Amazon FBA has that very few businesses have is so when you're valuing a business, you're looking at the goodwill, right? Like, what is the goodwill of this brand? And that's actually a really hard question to answer for most business models, because it's often very nebulous. But with Amazon FBA, the reviews are like right there, right? Like 5-star reviews, thousands of them. So like, at least as long as they're not doing anything like Black Hat, right, with the reviews, that people actually are legitimately loving this product. So that's one of the first things we look at, is what are the reviews looking like? We look at the SKUs, like what does the supply chain look like? We look at diversity of revenue. So having one SKU, for example, like one product, is usually a riskier move in terms of your valuation versus having multiple products. And when I say that, I don't mean like having like 300 or you're like a little $100,000 business or something. I mean, like, for example, a lot of our $800,000 to $1.5 million valuations will have between 3 to 10 different products that are kind of diversifying that revenue option. And same with traffic as well. Like, if you are getting like, let's say 100% of your traffic from Facebook ads, and for whatever reason you're getting absolutely nothing from Amazon organic, and your Facebook ad account is banned for whatever reason, well, what happens to your business? It's you don't have one now, at least not a very good one at the moment. So one of the big things with valuations is it's like, unless you're talking about SaaS is a little bit different, but with Amazon FBA and most other business models, you're not looking so much on the growth potential often when you're doing the evaluation, but rather the risk potential. Like, how risky is this? Like, the less risk usually leads to a higher valuation. So those are some stuff we would be looking at. Obviously, your net profit is a huge part of it. What is your average 12 months of your average of your net profit? That's something we would look at. How long has your business been around? So we had this one guy, I think he was actually out of Australia. He had this insane business that was growing just like incredibly rapidly, based on just a pure net profit, like EBITDA valuation, without looking at all the other stuff. He'd probably be worth like $3-4 million, but the business has only been around for 4 months. Like, almost no one is going to buy that business. It's just too new. There's not enough data, not enough historical data. So these are just a few things that are going through our mind when we're valuing a business, like both the hard metrics, but also some of these softer stuff, like, age. You can't really do much to make your business older except for weight, right? But these are things we're looking after: year-over-year trends, both traffic, both products. Have they stocked out? Are there been any of these kind of issues, or these blemishes, so to speak, on a business? And I'll be the first to say, just so your audience knows too, because sometimes sellers, they try to dress up their business where it's absolutely perfect. That's almost never a good move, because the buyer, if they're good, like Jeremy, they're going to find those blemishes and they're like, wait, why are you trying to hide this from me? It's usually always better to talk about them, because the failures that you have with the business, like say you're really good at logistics, but you're terrible at PPC, that's the opportunity for the buyer. You should be talking about that. Like, that's not a bad thing, right? So these are all the kind of things we would be looking at in a holistic picture.
Interesting. And Jeremy?
Awesome. So I think what we look for is similar to what was just discussed. So we look at like the fundamentals of the business. Is this a good Amazon brand? Does it have a review mode? What's its SEO look like? How are the keywords trending? Spend a lot of time thinking about the competitors. Who are they? How are they trying to compete? And validating, just trying to form a view of, do we think this business is going to stay flat? And really do the financial, like flat, like it's not going to go backwards. And do we think that, the financials kind of marry up to the financials are the hymn sheet for the quality of the business. So you could have the best ranked product in the world, but if your margins are declining or your profitability is going backwards, and it's, naturally there's going to be a bunch of people kind of, less enthusiastic about the business. The big thing that we then focus on is, how are we actually going to grow this brand? Because if we don't think the brand's growing and there's nothing that we can do to grow it, then that's an acquisition that Elevate won't make. We're not in the game of kind of buying a there's groups out there that are trying to buy a portfolio of e-commerce earnings and, eventually IPO or sell that business for 20 times multiple, buy the businesses at anywhere from 3 to 5 and then flip it, IPO it. We don't think that business model works. So we only buy businesses that we think we can grow, and if we can't grow them, then we don't really touch them. And the businesses that have the strongest growth profile and solid fundamentals are the ones that get the best multiple. There's this question that a couple of times that keeps coming up is, so how we value the businesses is, we value the businesses based off sellers' discretionary earnings. So what are the earnings of the business after adding back any non-recurring expenses or any lifestyle expenses of the seller? So if you fly to the Bahamas every year and you stay in a nice hotel and you put that expense through the business, we add that back to the earnings base. Right. And then what we do is, with that seller's discretionary earnings, we apply an a multiple to that figure and arrive at the valuation. So there's this other concept of EBITDA, which is earnings before interest, tax, depreciation, and amortization. That's kind of similar to seller's discretionary earnings if you make a few adjustments to EBITDA. So either adjusted EBITDA or SDE, seller's discretionary earnings. There's a similar sort of concept. In terms of size, like there's buyers out there for all different types of businesses. Buyers out there for businesses that make 100,000 profit, buyers out there for businesses that make 5 or more, and then there's a whole kind of cohort of people in between. So there's no minimum, and there's also no maximum. So you can sell anything for the right price.
So true. There is a variety of buyers. So like what Jeremy is saying, like the growth is a bigger thing for him, which to me, like as the entrepreneur looking to sell, talking about your failures is a really good thing to Jeremy, because like he has this whole team that could probably like optimize the thing you couldn't optimize, right? On the lower end, say between $100,000 $500,000 range, you do sometimes get the other buyer Jeremy was hinting at, that's just buying like kind of those e-commerce earnings, and maybe not even as a roll-up thing. It might just be like, I just made all this money in crypto, I'm going to go acquire a few brands and like relax with this, which we get those buyers too, right? But if your audience is interested, I actually have the data pulled up from 2021. It's not completely finalized, so don't quote me on this, but we'll be releasing it soon with our State of the Industry report. And as of right now in 2021, the average sales multiple for Amazon FBA across all sizes came out to be 39.8x. So that's a monthly EBITDA. So if you divide that by 12, you'll get the more normal EBITDA that all people were not EF uses. we grew up on the monthly multiple because we used to sell businesses way back in the day that were only like 3 months old back in like 2013.
Yeah.
but yeah, so yeah, we're looking at like 39x. Average sales price as of 2021 was over $1 million as well. That is a huge increase too. Like the sales multiple increased by over 41% from 2020 to 2021. So that is awesome for like the best sellers market I've ever seen.
Yeah, I think that's similar to what we paid for our brands. We did see a kind of we saw an increase similar to that level throughout the year. Kind of peaked in Q3, and we think it's starting to taper off a little bit now. But still attractive multiples for sellers if they're looking at selling. Someone asked a good question on like how do you determine the multiple? Well, there's a bunch of data out there. I think Empire Flippers, you guys also disclose it on the website too, like what listings sold. So if you look at what it was listed for, it's typically can be close, plus or minus 10%. But what I recommend people do is go keep a track of the market. Like if you're selling kitchenware products and you make 300K of SDE, start tracking listings on Empire Flippers and all other broker websites that are selling these brands, and just build up a comparable set of companies that are similar to yours and track what the multiples are trading at.
Sorry, go ahead.
Yeah, and just be informed.
Just give you an idea.
Yeah, just be informed. Similar to like real estate, where property can get valued at like dollars per square feet. Like the multiples for a business in this category with this number of SKUs, you can start to figure out what the multiples are. And then when you speak to buyers, it's like a buyer could underbid you on the price. You're like, well, I'm looking at these other 4 transactions and they traded at X. So that's when the buyer tends to know that the seller knows what they're doing.
For sure. One easy way to do what Jeremy just was suggesting, if you usually this is for buyers, but you can use this as a seller too. If you go to our marketplace and just register for an account, we will have a bunch of different filtering options, right? So you could filter, like make a watch list of basically, I want the view of everything that is sold that is in this price range, that is Amazon FBA. You can even make it like niche dependent. Like, so if niche was for some reason very important to you, niche almost never really affects valuations. Typically, it does in certain cases like apparel, or if you're in a hyper competitive niche, apparel is usually affects it in the negative way. But that way you can look at what is being sold every single week, and just like keep that list going. We also I don't know exactly how this is going to look in 2022 because we're changing it up. Every year we publish this giant report called the State of the Industry. But this year we're doing something a little bit different to try to figure out a way to make it more interactive. So that might be able to give you guys some more real-time insight into the marketplace. Because at the halfway through the year, this giant report I write is kind of outdated by now because the industry has just moved so quick. So we're trying to figure out a better way to give this data to people.
That's amazing. And how do you guys notice it? Because I think this is a perfect segue into the last point of this. And I'll fire off. I got a rapid fire I want to get with you guys in terms of like overrated, underrated, especially in the marketing world. But increasing the value of your business. And the reason I think this is so valuable, and I'll give you our context, is that a lot of brands are now approaching us because they're looking to exit their business to powerhouse platforms like you guys, but their logistics is an absolute mess. The past 24 months has thrown it through a hurricane. So whether they're using 9 3PLs across the entire country, or their shipping is stuck because it's quadrupled over time, this was the one place I wanted to get your curiosity. And I know there's probably some other opportunities, whether it's like catalog expansion or building a social media presence. How does this supply chain actually go into your guys' multiples and how you guys look at a business? Like, how important is it to make sure that they have a solid warehousing infrastructure or their inventory performance reports? The not so sexy part of Amazon, but I think is the most critical if they're thinking about exiting the company.
Yeah, well, the simple answer is if we don't think we can stay in stock, we're not going to buy the business. And given where supply chains are now, it's like a lot of kind of sellers that have gone long inventory, and that's we've done the same in our business. And so that's, you're in an environment where you've got to pay more for the storage cost. We're not 100% sure when that starts to normalize. We think over the back half of 2022. And as COVID starts to decline, and interesting to see what happens as, the Chinese come out of Chinese New Year and just what happens to congestion. But yeah, being able to stay in stock is a key question that we ask. Key question that we ask, and we spend a lot of time doing analysis on that question.
I would say supply chain is almost even though it is the unsexy part for me as a marketer, I much prefer the marketing. I think it's probably more important than the marketing, because you can have great supply chain, great logistics, all that kind of stuff, and have a very profitable business you're selling, even though you might have terrible or subpar marketing. It's very hard to do it the other way around, because you have no products to sell, right? You're just going to stock out. We had the business we just sold, a $24 million FBA business. Their marketing wasn't the shining point, the selling point of that business. It was their logistics, their fundamentals of how they were doing it. They were able to order at so much, their cost was so low, and there's supply chain so clean. That's what made it super attractive. I'm not saying if your supply chain is completely unclean, you won't be an attractive seller, but that's a big part of it. Because what Jeremy said, why would a buyer buy something that looks like it has no hope to staying in stock? And maybe that there might be the opportunity, maybe you are bad at keeping it in stock, and the buyer can see the mistake that you're making. But that's a very fundamental part of the business, is supply chain. And in general, with increasing your value, with what the slide says, I think FBA. I was listening to one aggregator say it's you increase the value of an FBA through 1,000 small cuts, just slightly cut above better than everyone else. And supply chain is a big part of doing that.
Yeah, 100%. So the best things that you can do to kind of max it, it's generic advice, but have a great business that's growing. So if you can consistently grow, now if you consistently show that contribution or SDE dollars is improved, dollars are going up, top and to the right, then buyers, it makes it very hard for buyers to turn away from that. So, new SKU launches is something that we like to see in businesses, because then we know that there's a cohort of SKUs that are maturing. Then we know there's a cohort of SKUs which is coming up behind and continuing to grow. So we love to see that in businesses. So, keep launching, being able to demonstrate that there's a few SKUs which are gaining early traction is always nice. Making sure that you have your IP locked up. So if you build an audience for your brand and you've got a Facebook group with 40,000 active people involved, you're going to get a better price if you can prove that you can monetize that audience and benefit your Amazon business. Having some diversification outside of the Amazon ecosystem is nice, but not essential, because that's something that we can do, and we're doing at scale. Having a really great product and having a great product. The thing that I last year, we know it happened with us on a deal, and we know that there were 2 other deals in the ecosystem that fell over because of compliance. Aggregators are getting better at thinking through and underwriting these businesses, and compliance is something that compliance is something that a lot more people are paying attention to. So if you're importing a product from overseas or getting it made in the US, you're making marketing claims against those products, making sure that you've got your compliance done and you've got testing and all the rest of it. That's something that's very easy to remedy and fix, but it can kill a deal. If you've got an issue in your business, you can kill a deal, and the deal could get delayed 6 months. So that we've seen that as well. So just making sure that all of that's buttoned up is too. And don't do any black hat. And don't have the appearance or suspicion of doing black hat, because we are now getting very sophisticated at what we do and how we check for that. And there's just a whole bunch of deals that just fall over the moment we suspect anything. So that's a big thing as well.
Yeah, but the black hat stuff is never worth it. Short-term profits for very long-term pain is basically what you're giving yourself.
Yeah.
Now, the one other thing, and Jeremy, you probably see it too, is if I'm going to sell my company, let's say it's almost going to be $1 million this year, boom and baby company. Now, when we think about this, we're getting a lot of brands that are torn between, if they want to maximize their valuation, should they be looking at diversifying the channel? So for example, should they be looking at going to Walmart.com, or should they be looking at expanding their catalog? Or should they look at building their social media presence, build a TikTok, build an Instagram, because now it's more community, it's more brand voice. Like where, if they had, let's say, a 2 to 3 year roadmap of, I want to get the most out of this company, where do you think the best levers would be to push?
At the end of the day, drive profitability. So if launching a TikTok audience can help you, so we did an influencer campaign on one of our brands the other day, and we did $260,000 of sales over 2 days from one Instagram story, and the average sales for that brand on a day is 8K. So if that's, and we've tried a lot of influencers to kind of finalize on the one that worked. If that's the strategy that's going to grow your profit, then that's what you should be doing. If you think building an email list and you've got a really engaged and unique differentiated product and you can build an email list or community around that, then use that to drive the performance of your brand. You know, channel expansion can kind of drive incremental growth. Like Walmart's 10%, eBay could be 5%. You know, you're not going to get a big step change from doing that. You are by launching new products or building audiences. So just focus on what gives you the best bang for your buck. And that's kind of the advice that I give to people.
Yeah, I agree with that. I think the most core thing you can do is seeking to build a better audience, because a better audience will translate into more revenue. I mean, if you're building a quality one, right? I think that is like the most crucial thing to anything, including what we do at EF, right? Like what I'm always doing is trying to increase our audience, like that's always my goal. Like how do I get more audience attention? But to be a little bit, to give a more unique answer from what Jeremy just said, or different answer rather, like one thing, I talk to a lot of sellers who are like, how can I, get that extra $100,000 in my valuation or $250,000, whatever it is, right? And sometimes it's not worth going after. If your plan is to sell, like, let's say you had $1 million FBA business, it might not be worth it for you to spend the next 4 months to bump that valuation to say 1.1, right? Because if you already have in your mind to sell, it's better for you to sell now instead of like in 5 months. Oh, great, there's a black swan effect. Now I can't get any of my inventory in, right? Like I actually had a friend. It was a smaller business. It was worth, I think it was about $400,000, somewhere around there. And he knew it was a content site, so not FBA. He knew if he changed the link structure around, he could get an extra 50K. So he spent 6 months doing that. But then a Google algorithm update happened. He ended up selling that exact same business with us for around 250, right? He would have been a lot more happier not getting the extra 50K. So that's what I mean. Sometimes it's not worth going after it if you already have a predefined plan of what you're going to do with the capital, and if it's enough to get you there or what you want to do. It might not be worth going after that. But this is something we help people all the time when it comes to exit planning, to make sure that makes sense for their personal and business goals, whichever way. So it's just some food for thought. Growth sometimes isn't always the best strategy if you already want to sell the business.
Yeah, 100% agree with the kind of sentiment there. So you will never go broke taking a profit, and always take kind of capital. One of our advisors always says to us, like, always take certainty of capital over valuation, because you can do a lot with capital. So, if you tried to sell your business in Q1 last year, the multiple was lower, but a lot of deals were getting done. Whereas you look at Q4, the multiples are higher, but the bar for deals getting closed is way higher. And a lot of businesses are facing margin compression on the supply chain side, and that's scaring buyers. So it's like, if you'd sold that business in Q1, you would have got a great deal done. You'd have a lot of money in the bank. Whereas today, like that same deal may not get done. And we've seen a ton of businesses come back to market and they're at half the value that they were. Which is kind of, it is what it is. Valuation multiples change all the time. Capital flows change all the time.
Amazing. We got 2 other questions here. I want to get through this in case anyone else has to go as well at the 1 p.m. mark. I have a couple. It's just it's a list of things that I want you guys to spit them out super fast in terms of whether it's overrated, underrated. And anyone who ends up jumping off right before 1 p.m., thank you guys so much. We're going to have a link. You can download the PDF and connect with all of us as well. Between Greg and Jeremy, there's a wealth of knowledge. So I know they're going to be more than happy to speak to you guys. Let me get through this overrated, underrated, and we're going to jump it down. So you can just say overrated or underrated, depending on it. Starting an Amazon business in 2022.
Underrated.
TikTok for brands.
Underrated.
Shopify.
Yeah, maybe over. It depends if you're really good at driving off Amazon traffic. If that's your skill set, then go for it.
Yeah, I'd agree with that.
A business that we made $2 million of profit on a year, our competitor who isn't on Amazon's making 10. So you do the math. Yeah.
Walmart.com.
Underrated.
Yeah, I would say it's underrated as well. I don't know much about Walmart, but I'm seeing it start coming on the horizon now.
I'm going to say underrated too.
Yeah.
Instagram.
Bit overrated, I think. Actually, the advertising platform is still really good. The social organic reach, I think, is a bit overrated, though.
Agreed.
Dropshipping.
Overrated.
Overrated.
It's a tough business model to sell. Tough one to sell.
Retail arbitrage, online arbitrage, 2022.
Underrated.
Really? I would say overrated on that.
Well, it just depends. Well, that's where we kind of came from. So
right. Yeah.
We built a really nice business. We made a ton of cash.
I'm right in the middle. I think there's opportunities for it to be a really good business model, but you have to kind of get through the fluff to do so. So I think if you can step into wholesale and scale it, then it's underrated. But if you're going to do it from a kind of a part-time piece, I think it might be overrated.
Gotcha. Yeah, I'm thinking as a broker, right? Like we probably would never sell it, right? So that's a fair shout.
We got 6 more here. Influencer marketing.
Underrated.
I agree with that. Yeah.
Interesting. And this is great. That's your domain, so I'm super interested. Building online community for 2022.
Massively underrated.
I would say like
huge.
Grossly underrated.
That's one of our main things in 2022 is building more community. It's so important.
Yeah. Any specific platforms? Is it Facebook? Is it like Discord? Is it Reddit? What are you guys seeing?
I think where your audience hangs out is always the best from just an overview of it. I think Facebook is really good from the viral growth perspective, but right. I do see more and more people going into these like dark social platforms like Discord. I think those are extremely valuable that not a lot of brands do. And it could be really incredible for you if you did it. It's not right for every business, but that's what I would say. Facebook for the viral growth. I think Discord has a more intimate, cooler setting though for a lot of people.
Brand registry.
Underrated. I would say like you almost need it at this point. I would say for the most part.
It's compulsory. Yeah.
I would say the utilization of it is underrated. People aren't getting the full utility, I feel, of brand registry. So because of that, it's underrated. But I feel like there's not enough new launches coming out of it, like the ad platform, for example. So I'm right in between. Last one. The supplement category on Amazon, overrated, underrated?
Overrated.
I think it's misunderstood. There's a lot of aggregators that are steering clear of it because they don't understand the regulatory regime or what makes a supplement successful over others. There are groups specializing in it and they're smashing it, but they're doing small acquisitions. But like they're doing very, very well. So a lot of black hat. Like the other thing as well is there's a ton of black hat in subs. So we're yet to place a bet there.
Yeah, that's exactly why I called it overrated. There's so much black hat in supplements that we will almost never list one. Like we have sold them before and we still would, but there's just so much of that in that space. And it's tough. It's really tough to weed through the good stuff on there. So that's why I consider it overrated. From an entrepreneur perspective, absolutely great cash flow if you can compete inside of that market, though.
Interesting. I don't know if you guys had a couple more minutes. There's a couple more questions that came in. Sure. I thought you guys just might provide some insight before you guys jump off. If you had a couple minutes to jump on these before we head out.
Yeah, I'm fine. Yeah.
Daniel asked here, in terms of the recording for the webinar, yes, we got a recording for it. So we're going to share it over with everyone afterwards. So you guys can have access to that. If you guys want to hear Jeremy and Greg, whenever you guys please, we'll have the recording in the audio version too. So that will be good to go. If you're acquiring, there's a two-part question here from Daniel. Aggregator biz seems hot now. In general, do you see multiples increasing or decreasing over the next 12, 24 months? That's part one. And part two is, if you are acquiring, does it make a difference if you're an LLC or an incorporation, like how the business is actually set up?
Got it. So on the first one, I said multiples over the next 24 months, like flat to down. My rationale there is the stock market is, public markets haven't started the year well. And really what's driving the whole Amazon ecosystem is inflows of capital. So, the industry is facing headwinds with shipping margin compression. And I think that makes investors, nervous around, that does make investors nervous around when's that going to normalize. The quicker, the better. And so, what you're going to see is you're going to see some of that public markets pressure will percolate its way down into the private markets. So, I think flat to down. Also, there was a lot of groups out there last year that raised, they did 1 or 2 rounds of funding, and that's fine to raise. Smaller check sizes, but to keep scaling your business beyond that, they're different levels of investors. They're less VC and more private equity. And it's a different bar and a different challenge. So, I think it's going to be interesting to see how this year pans out. I think there's going to be a thinning of the herd of smaller aggregators potentially consolidating, merging, exiting. It's going to be an interesting 12 months.
Yeah, I pretty much agree everything with what you just said there. In fact, we've seen a few aggregators like moving towards like liquidating some of the brands that they bought, and I think part of this is not all the aggregators are operators like what Jeremy is with Elevate Brands. A lot of them have approached it as like business is a spreadsheet. Here's my spreadsheet math, and look at this model, like this financial wizardry that doesn't always play out the best in reality, right? So some of them are discovering that stuff, and like what Jeremy said, in 2021, all this capital coming in, and 2020 as well, really did boost those multiples up. And then you had other players or non-aggregators that you see in the sub $1 million mark that are like, say, commercial real estate investors who during the 2020 pandemic and going to 2021, they're not seeing the rental yields from, like, say, their strip malls, from their other commercial real estate office buildings that they had. And I know quite a few of these people who liquidated their properties to get into buying Amazon FBA, because of the hype around aggregators and what they're doing has driven a lot of interest. But over the next 12 to 24 months, I think the vast majority of the valuation bumps we've seen are over. So I think it either stays relatively the same or could go down based on the shipping crisis that we're seeing, along with some of the spreadsheet guys realizing like, oh, maybe this doesn't actually work.
Wow. So I saw there's kind of two parts to this one question. It was Sheetal's here, and he said, amazing question, by the way. Supplements are overrated. What if there's existing retail business as well? So if they have their own retail space, I know you guys were kind of mentioning like exclusively on Amazon, like the supplement private label company. But if so, how can you sell the Amazon Shopify business only, but keep your own retail side? Have you guys ever seen that before, where they actually have a retail footprint, like Shido's mentioning, and they're only selling their Amazon piece? Or it's a really unique question, but it's super valuable.
Yeah. So we have seen it, like the example I mentioned earlier with the beauty salon, that it was similar, skincare, not supplements, but similar concept. But that was unique in that it was their own local establishment. I would think, like, we haven't done this, but maybe you have, Jeremy, I would think you have a bunch of retail space, like you're selling like on the physical shelves at Walmart or Walgreens or something like that, that would be going along with the brand, unless you like change the brands, because you wouldn't want to sell a brand that you are also still selling, like that you own the retail version of it and they own the Amazon version of it. I think that would cause a lot of conflict.
Yeah, agreed. We would want to own the whole thing, because you want to control the brand and the selling price and all that sort of stuff. And you just wouldn't want to lose control of it.
Yeah.
Would the valuation help though? Would it increase because they have retail visibility? Does that come at a value? Is that an advantage or disadvantage?
It could help. It could definitely help.
It almost always will help if it's a meaningful amount, of course. Like, sometimes we see like, oh, I'm multi-channel with like 1% on Shopify. Like that doesn't help. That probably just annoys the buyer more than, oh, I got to manage this 1%, So if it's a meaningful amount on the retail side, I think that would help, because that plays into channel diversity, right? One of the things that goes into your evaluation is your traffic diversity. You're literally in a traffic place that the vast majority, let's face it, the vast majority of FBA entrepreneurs are not in, right?
Got it. Last question. Charles has asked this a few times, so I want to make sure we got to it before we close things off. Food and beverages. I know this is sort of a sensitive topic when they're thinking about exiting. Obviously, do you guys buy them? Like, Greg, are you seeing brands buying them on Empire? And then, of course, Jeremy, are you guys physically buying them? And also, what's that multiple look like?
Yes, there are buyers of food and beverage products. Some aggregators are staying away from it because they don't like the shelf life, but others do like it. They're not selling for revenue multiples; they're selling for SDE or EBITDA multiples. And again, just go check the Empire Flippers website, and there'll be a few food and beverage businesses. We bought one off them. And you'll be able to see what comparable businesses have been sold at.
Yeah, I echo everything Jeremy said. Less interest doesn't mean you can't sell it, though.
Yeah.
Got it. Super interesting. Yeah, I know it's kind of a weird one with the food category. I think people are kind of shying away from it. But I think anyone who's looking, especially like when it comes to like if you want to compare businesses, I don't even think a lot of people knew Empire Flippers. Like unless you're, of course, in the Amazon space and actively looking, like the ability to see these other businesses is such a cool idea. And you can see everything from like the category to how much they sell for. So anyone who's looking or like wants to get really inspired and like excited about whether or not their business could sell, it's really cool because it's a full marketplace of businesses. So between that or utilizing the tool for valuation, you guys can actually go in there and check it out. I don't want to take you guys any longer. I really appreciate you guys jumping into this. If there was any other questions, I know, Vinny, you've been incredible in here helping answer some of these. And I'm going to connect everyone else afterwards over on LinkedIn and email as well. So Steve or Nick or anyone else, if you guys have questions, I know you guys are going to be more than happy to answer those afterwards. So I want to say thank you guys again. Anything else specifically that you guys need to touch on? Where can they find you?
Yeah, sure. My like you said, LinkedIn or my email, just greg@empireflippers.com. And thanks for putting this together. I had a lot of fun. Hopefully your audience got a lot of value. Always good seeing you again, Jeremy. So it was a pleasant talk.
Yeah, amazing. Awesome. Yeah, thanks for putting this together. You contact me through LinkedIn, the website, or jeremy@elevatebrands.com. I'll be at Prosper if anyone's heading to that. So yeah awesome.
Oh, we will also be at Prosper. We'll have to switch shirts. Our EF guys will wear the Elevate brand.
Yeah. Greg, are you going to a full moon party now in Thailand?
Dubai. I'm going to Dubai at the end of the month to speak at Affiliate World. So I'll bring in the full moon to Dubai.
Awesome. And if anyone wants to check out the handout's still there, download it. It has all the details in there. We'll show it over afterwards. It's a whole knowledge bank of all of these resources and our information. So I'm super excited, guys. We'll chat soon, and thank you guys again for coming on.
Pleasure.
Thank you.
Thanks, everyone.
All right, see you guys. Bye, everyone. Okay, I'm gonna close this bad boy out. Thank you guys again for coming on to this.
Pleasure.
Yeah, thanks, man.
Excellent.
Let's see this. Here we go. End session. See you guys.
All right, catch you guys. Bye.